Bitcoin bounced, but this is not the real story. The real story is whether the buyers came back. Because in a market like this, price alone can be very misleading. A green candle can make the market feel strong for a few hours, but if the money behind that move is not real, the bounce can disappear just as quickly as it arrived. That is why this moment matters. Bitcoin is not just testing a price level. Bitcoin is testing whether real demand still wants to step in while the macro environment remains tight, ETF flows remain uncertain, and Wall Street is not yet showing full confidence. The mistake many investors make is simple. They look at the chart, they see Bitcoin moving higher, and they immediately assume the risk is gone. But markets do not work that way. A bounce is not confirmation. A bounce is only the first question. The second question is more important. Who is buying? Is this long-term capital coming back into the market, or is it just short-term traders chasing a move? Is this the beginning of renewed accumulation, or is it only a relief rally inside a larger liquidity test? These questions matter because Bitcoin is not moving in isolation anymore. It is now connected to ETF flows, interest rates, inflation expectations, and the broader appetite for risk across global markets. This is why ETF demand is one of the most important signals right now. When spot Bitcoin ETFs are taking in money, they can create a powerful support layer under the market. They show that institutional demand is not just talking about Bitcoin, but actually allocating capital into it. But when ETF flows turn negative, or when outflows continue after a price bounce, the message becomes very different. It tells us that some large investors are still cautious. It tells us that Wall Street may not be fully convinced yet. And when price is trying to recover while ETF money is still leaving, the market is not giving a clean bullish signal. It is giving a warning that the bounce needs confirmation. That does not mean Bitcoin must collapse. It also does not mean the bull story is dead. It simply means the market has not earned trust yet. This is the difference between excitement and confirmation. Excitement happens when price moves up. Confirmation happens when price holds higher levels, volume improves, ETF flows stabilize, and buyers keep showing up even after the first bounce is over. Without those signals, the market remains vulnerable. A weak bounce can attract late buyers, create a feeling of safety, and then reverse when liquidity disappears. That is why smart investors do not only ask, "Did Bitcoin bounce?" They ask, "Did demand confirm the bounce?" The macro backdrop makes this even more important. Inflation is still not fully defeated, and the Federal Reserve is still forced to be careful. When inflation pressure stays sticky, interest rates cannot easily move lower. When rates remain high, liquidity stays more expensive. And when liquidity is expensive, speculative assets have to work harder to attract capital. Bitcoin can still rise in that environment, but it usually needs a stronger reason. It needs clear demand, strong flows, and a market that believes the next move is supported by real money, not just short-term emotion. The 10-year yield is also part of this story. When bond yields stay elevated, investors have more competition for their capital. Money does not have to rush into risk assets if safer assets are offering attractive returns. This creates pressure on Bitcoin, growth stocks, and other risk-sensitive markets. In simple terms, Bitcoin does best when liquidity is improving and investors are willing to take more risk. But when yields are high, the market becomes more selective. Capital does not flow everywhere. It chooses carefully. And right now, Bitcoin has to prove that it still deserves that capital. This is where the AI and tech story also matters. A lot of market attention has been focused on artificial intelligence, mega-cap technology, and companies that investors believe can produce real earnings growth. That does not mean AI is taking all the money away from Bitcoin forever. But it does mean Bitcoin is competing inside a crowded risk market. If capital can move into AI stocks, cash-like instruments, bonds, or defensive assets, then Bitcoin needs more than a price bounce to stand out. It needs a clear liquidity story. It needs ETF demand. It needs confidence. Without that, the market may keep rotating rather than committing. So the key question now is not whether Bitcoin can bounce. The key question is whether Bitcoin can hold the bounce. There is a very big difference between touching a higher level and building a base above it. A strong market does not only move up, it absorbs selling pressure. It holds important zones. It turns fear into demand. It shows that buyers are not just reacting to price, but actively defending the market. If Bitcoin can hold its recovery while ETF outflows slow down, while macro pressure does not get worse, and while risk appetite improves, then the bounce becomes more meaningful. But if price rises while flows remain weak and yields stay heavy, then this move is still fragile. This is why the next few sessions are important. We do not need to predict every candle. We need to watch the confirmation signals. First, do ETF flows improve, or does Wall Street continue to reduce exposure? Second, does Bitcoin hold its recovery zone, or does it quickly lose momentum after the bounce? Third, do yields and Fed expectations calm down, or do they continue to pressure risk assets? These three signals will tell us more than one green candle ever could. They will show whether Bitcoin is being accumulated or whether the market is simply reacting to temporary relief. The calm way to read this market is simple. Do not ignore the bounce, but do not worship it either. Respect the price movement, but wait for demand to confirm it. Bitcoin does not need perfect conditions to rise, but it does need real buyers. If ETF demand returns and price holds firm, then the market can rebuild confidence. But if Wall Street keeps leaving while price tries to climb, the message is different. It means the market is still searching for support. It means the bounce is not yet a breakout. It means Bitcoin is still inside a liquidity test. So for now, the story is not Bitcoin is back. The story is also not Bitcoin is finished. The real story is more precise. Bitcoin bounced, but the buyers still need to prove they are here. And until that proof arrives, the smartest approach is to stay calm, follow the flows, watch the yield pressure, and remember that in this market, price gets attention, but liquidity decides the trend.